Evening, friends. I have another company today called HFCL Limited. It has bagged an order from the Indian Army worth 44 crores and 36 lakhs. Is supply for tactical optical fiber cable assemblies as per customer specifications. This indigenous manufactured solution features of optical fiber cable capable of withstanding heavy armored vehicle loads and its equipment with special military grade connectors designed for harsh and demanding environments is specifically engineered for mission critical applications requiring rapid deployment of optical fiber communication links in challenging battlefield conditions. Lightweight and portable, it can be conveniently carried by infantry in a backpack. So contract term by July 2025, contract price 44 crores 36 lakhs. IPO listing of the company is 9th of March 2011. The company's name was changed to HFCL Limited in 2019. It was formerly called Himachal Futuristic Communications Limited, and it was set up in 1987. Stock has rallied from rupees 9 in March 2011 to 161 on December on 20th of September 2024, and it has corrected down to 83, which is the current price. Company has an efficient cash conversion cycle of 69 days, has healthy liquidity position with a ratio of 2.08. Company has delivered poor sales growth of -1.8 in the last 5 years. Company has a low return on equity of 10% in the last 3 years. Promoters have pledged 48% of their holding. Dividend payout has been low of 8.59% over the last 3 years. Company has high debtors of 181 days. Company has poor revenue growth of -0.25. Company has contingent liabilities of 1,177 crores. Company has negative cash flow. Company is trading at a high P of 31. Promoter holding is 48%. So all these are signals that this company is not worth investing. And if you accidentally hold this company as a part of your portfolio, it would be best to consult with a financial advisor, and the best way to find is to get out of the stock and find a more suitable company that would be able to give you a better return on your portfolio. So these are the ratios that you can go through. Earnings per share EPS of 2.65, inventory turnover ratio of 0.74%, interest coverage of 4.64, range of 0.25 or 0.21 as the debt equity ratio, asset turnover of 1.2%, cash of 318 crores, debt of 819 crores, market cap 12,098 crores, portfolio of optical fiber cable, indoor and outdoor Wi-Fi, cloud-based network management system, high density cabinets, PCL splitters, rail communication solutions, Ethernet and others. Sectors served: telecom, defense, railways, utilities, and security and surveillance network, both in private and government sector. Public public telecommunication accounts for 89%, defense and electronics 8%, railway communication accounts 3%, 7,678 crores, increased from 5,200 last year. Uh, Out of the total book value, 5,075% are from government and the remaining 25% from the public sector. In terms of services, network services account for 5,180 crore, O&M accounts 2,051, and product accounts 447 crores. Company's client base: Jio, Airtel, Vodafone, L&T, SIFI, SSCI, Alstom, BSNL, Globe, Liquid, Mayflex, etc. Manufacturing capabilities has 5 across Telangana, Tamil Nadu and Goa. Optic fiber cable 25.08 million FKM per annum. FTTH cable 702K cable kilometers per annum. Companies: Hauser, Tamil Nadu facility plant manufactures raw material like armide reinforced plastic rods, fiber reinforced plastic rods, impregnated glass fiber reinforcement, and polymer compound used in manufacturing of OFC. Capacity expansion from 12 million FKM to 33.9 million FKM. Optical fiber cable from 25.08 million FKM to 35 million FKM during FY23 to FY25, setting up a new manufacturing facility in NCR dedicated to telecom and network products. New facility is targeting revenue of 800 to 1,000 crores compared to rupees 122 crores as of December 23 from its existing product portfolio. HFCL is spreading product innovation through tech-centric R&D, operating in Bangalore, Gurgaon, Hyderabad. Products under development like 5G indoor and outdoor, FWA and CPE, 5G radio, BR, 88R, software-defined radios, ground surveillance radars, etc. High promoters pledge of 45% as of December 2023. Company has increased the share of private customers to 73% as of 9 million from FY24 versus 51% as of FY21. Same company is focusing increasing its product-led revenue, has been able to increase product revenue from 27 to 48%. Subsidiaries: HTL Limited, Polylexil Security Systems Private Limited, Moneta Finance Private Limited, HFCL Advanced Systems Private Limited, Radef Private Limited, Dragon Wave HFCL India Private Limited, HFCL Technologies Private Limited, HFCL INC, and HFCL BV. Nimapa Telecommunications Private Limited, and Big Cat Wireless Private Limited. So moving on, this is the sequence as of yesterday. 6% up as of yesterday for the last 5 days. 14% still down in the last 1 month. 45% loss in the last 6 months. Overall year to date with a corrected figure of 26%. Overall 129 times or 129% high in the last several years, all-time high. Logo of the company, a few different other information sets. And this is the factory layout of the factory, one of the factories of the company. This is another factory of the company. Third set of production unit, another set of production unit. This is probably the last set of the production unit. We've been through this, we've been through this, we've been through this, yeah, all of the information, we've been through it. So high of 171, low of 77, face value 1 rupee, ROC 13, ROE 9, book value 29, stock P 33, and debt and cash 318 and 819 crores. High of 161 September 24, a high volume of 12.48k July 5th 2024. Price to earnings 62 as of September 24. Price to book value 5.64 as of September 2024. Overall, about five companies comparison in the industry. Highest market cap for this company. Price 83. The others have a higher price comparatively. Suyok Telematics 1100. Vindhya Telelinks 1405. GTL Infrastructure 1.59, that's the lowest. Bondada Engineering 395. Then price to book value HFCL 3, Bondada 16.3, Vindhya Telelinks 1.19, Suyok Telematics 3.2. Well, the price to earnings Bondada 106, Vindhya 13, Suyok 17, EPS 2.65, Vindhya EPS of 106, Suyok 65. So possibly the share price of those two stocks must be high. That is the reason why the EPS is high. ROE 12, 25, 35. So return on capital Bundada 33, Vindhya 16, Suyok 25. Worth looking into and getting some detailed analysis. HFCL and two group companies, Quadrant Televenture. We've been through this poor sales growth of minus 1.18 over the last 5 years. I think we've been through all of this. High debtor days, dividend payout low. We've been through all of this. We've been through all of this. Contingent liabilities of 1,177 crores. Then this is the quarter-on-quarter results. The sales have been on the reducing trend. Again, the net profit has somehow reduced and remained stable, impacting the overall performance of the company. This is year-on-year sales revenue and expenses. So sales have been dropping, which is a concern. Profit also has, in fact, net profit has increased, which is something very strange. Some figures to look out for: compounded profit growth, return on equity, stock price CAGR minus 18% in the last 1 year, compounded sales growth -1 in the last 5 years, -7% sales growth last 1 year, profit growth 21%, ROE 9, ROC reducing to 12.5, debt to equity 0.21 good. This is somehow, I can't say possibly good, but may need further investigation as to understand why it has a minus of 109. Interest coverage ratio good again, excellent figure again. 48% public holding, promoters holding 36%, 48% of the shares pledged. Uh, this is the dividend history over the last 4-5 years. Investor holdings, promoter holdings, investor holdings, reserves of 4,000 crores, which is good. Borrowings have increased as a cause of concern. Debtor days has increased, inventory days have increased, days payable have also increased, working capital days have also increased. So overall, something is overall the sequence is not favorable because everything is highly impacted in the last 1.5 years. That is it, guys. Overall sentiment for this company is negative, so I don't think it's worthwhile investing. However, if you have already invested in this company, I would suggest consult a financial advisor and find some better option for you to uh, move your portfolio to a different company or to an entirely different sector. Thank you for watching, friends. Take care. Have a good weekend.